Hi everyone. By the end of this video, you will become Bahubali of liquid funds because we are going to discuss 37 liquid funds and we are going to select the best liquid fund for your investment. Also, throughout this video, I am going to talk about nitty-gritties and some important concepts about liquid funds. So please watch this video without skipping. What you see on my screen is a list of liquid funds and we are going to analyze them. Don't worry, I will simplify everything. Okay. So the first parameter we are considering here is asset under management. Asset under management is very important in case of liquid funds because of two reasons. Reason number one is, please remember that in liquid funds, what happens is investors are parking their money only for very short duration, like 30 days, 40 days, 60 days, 90 days. Typically what happens is when equity market is not doing well, right? It is very uncertain. Maybe there is a fear of recession looming. What investors do is they withdraw their money from equity market and they will park it in the liquid funds and will wait for the market condition to get better. As soon as the market condition get better, they start to withdraw this money all of a sudden from liquid funds and will start to allocate it in, let us say, equity market. Now, any liquid fund that is able to deal with all of this demand of withdrawal of the money from liquid fund will do much better, and therefore liquid funds that have higher asset under management, they can deal with these situations much better versus liquid funds that have a lower asset under management. So higher the asset under management, better it is. Reason number two is that ability to deal with the debt default. So let us say SBI liquid fund that has got 55,000 crore worth rupees AUM versus another small one. Let us consider here, let us say Quantum liquid fund which has got only 542 crore worth rupees of AUM. If both of them give a loan or debt to, let us say, a company, let us say L&T for 100 crore rupees, and now let us say L&T is not able to repay that money back, then Quantum liquid fund is going to struggle big time because of that one default that has happened in their portfolio. But SBI liquid fund is going to be in a much better position to deal with that default. Although in cases of liquid fund, the default potential chances are very low, but still there is a higher risk of not able to deal with the debt defaults in cases of lower AUM. So therefore higher AUM is better in cases of liquid funds because of these two reasons. Now let us move to the expense ratio. What we see here clearly is that expense ratio is somewhere between 0.10 to 0.20, and there is not a massive difference between these funds. And what we can conclude right now is it's very cheap to buy liquid funds or invest your money in liquid funds, much similar to index funds, right? Let us now move to minimum lump sum amount. Again, majority of these liquid funds allow you to invest 5,000 rupees minimum, or even 100 rupees or 1,000 rupees. So not a problem at all. Fourth one is lock-in period. So please know that one of the great benefit of liquid fund is that the lock-in period is literally zero. You don't need to worry about it. You can withdraw your money without worrying about the lock-in period. Also, please know that exit load in cases of liquid fund does not apply as long as you keep the money only for 7 days. After that, there is no exit load, which is again another great advantage of investing your money in liquid funds. As you may already know that liquid funds invest their money into debt instruments which mature within 91 days maximum, right? But more importantly, what we really need to find out is where actually they have invested their money. So what you see on my screen is 3 categories that we are going to consider right now, and I want to give you a live example of a liquid fund which is, let us say, Invesco India liquid fund, because it has got all these 3 categories covered, right? So let us jump into that and we will understand in more details about the significance of these 3 categories and how they can make one liquid fund better than other liquid funds, right? So if we come down here, we are going to have a look at the top holdings. You will see that the first top holdings here, the category is SOV. SOV means sovereign. That simply means that it's a government driven, or it's a debt given to the government in a various way, right? So what you see in the first one is Government of India Securities, central government loan. Here the loan has been given to the central government. You've got treasury bills as another category. You've got state development loan, for example, Kerala state for whatever development that might be happening in Kerala. Reserve Bank of India T-bills here as well. So all in all, SOV category is the most safest debt category because the money has been given to government. And what are the chances of government defaulting? You tell me in comments, what are the chances of government defaulting, right? So this is the most safest category of debt. Therefore, that is our category number 1 here. So I've got for each of these liquid funds here how much of their money they have invested in SOV category, right? I've manually entered these, by the way, right? Let us now go and have a look at the second category, which is AAA. Okay, now AAA is the second most safest debt category. It is the highest debt category after government category, right? So you see, for example, here Kotak Mahindra debenture, National Bank for Agriculture debenture. Debenture is type of a bond where Kotak will pay a fixed percentage of interest on the money that they have raised from this liquid fund, right? So that is the second category, very, very safe. The third category comes A1 plus. Again, this is the third most safest category in terms of debt, and you will see a bunch of instruments here, for example, commercial paper. Likewise, you have certificate of deposits, so which are basically like a fixed deposits, but they are raised by the banks, right? So like that, you will see that mainly these are the three categories, and SOV is the safest one, followed by AAA and followed by A1 plus, right? So what we have done here is we have got the distribution of how much money each liquid fund has invested in these three categories. We are going to use this absolutely to filter down our liquid funds that are going to be the best liquid funds. Let us now have a look at the returns and understand the nitty-gritties about returns in liquid funds, right? So what I've got here is CAGR of last 3 years, rolling returns last 3 years, CAGR 5 years, and 6 months absolute returns. What you will notice here is that the returns are very, very similar. There is not huge difference, right? Which is the case because liquid funds are not investing in stocks where few stocks are going to perform and not perform. Therefore, the returns are going to be very consistent, right? That is point number one I wanted to make. Point number two is you will also notice that the returns are really low here. They are not giving you 8%, 10%, 12% return. And some of you may have this question that why should we even invest in liquid funds? So there are 2 or 3 use cases that let me give you. Number one is if you have money lying in your bank account that you are going to need in the next 3 to 6 months, right? So for example, you have 10 lakh rupees you have saved for your car loan, or you've got 20 lakh rupees lying around now that you are going to make your house or flat down payment, right? Rather than leaving that money in the bank account where you might only get 2 to 3% interest rate, or even if you do fixed deposit, the short-term fixed deposit duration interest rate is only 3%, right? And if you break it, you are going to have to pay penalty as well on that, right? So therefore, liquid fund is very, very safe to park your money in those examples. And also you are going to get better returns than fixed deposit or bank rates, right? That is number one. Number two is emergency fund, right? If you're building your emergency fund, some of your money you can park in liquid funds because liquid fund gives you the flexibility to withdraw money instantly, right? Nowadays, you can withdraw money in some of the funds within like 30 minutes, right? So these are the two main reasons that you might consider investing your money in liquid funds, right? The third reason is that you see right now the returns are very low, but let me show you. If you go back to 2014, you will see here that in 2014, Invesco gave 9.18% return, right? It has gradually coming down, and right now in last year 2021, it has only given 3.3% return. The reason is very simple. Let us look at the RBI repo rate, right? So this is how RBI's repo rate has been changing. So if you see in 2014 here, RBI's repo rate was between 7 to 9%, roughly 8%, and it has been gradually coming down, right? So because if RBI's repo rate is very low, what happens is that is the rate at which RBI is lending money to the banks, and banks then are lending this money further, right? If that rate is very low, what is going to happen is overall the debt rate are going to be very low in the market. Therefore, liquid funds are only going to give you less returns, right? Now, as the repo rate is going up, liquid funds are going to give better returns in the next 6 months to 2 years, depending on how the repo rates shape out, right? Let us now select the best liquid fund out of this list. The number one criteria for us to select the best liquid fund is the liquid fund that is the most safest one. Please remember, in cases of liquid funds, you are not going to compare based on the returns because the returns are very similar, right? Therefore, we always need to look for the safety of our money when choosing the liquid funds. What I'm going to do simply is looking at the SOV here, which is the most safest category of liquid fund. So what we are going to do is filter it out here. So we are going to say, give me all the liquid funds that has SOV category more than 25%, meaning they have invested more than 25% of their money in the government related debt because that is the most safest one, right? We get out of this roughly a few liquid funds here. Now what we are going to do is, if you look at it, the first one here is Look at these three here, Parag Parikh, Quantum and Motilal Oswal. They have almost invested more than 50% of their money in SOV, right? Now, if you want to be really safe, then I would recommend Parag Parikh liquid fund, because they have invested 88% of their money into the government related category, and their AUM is looking decent. It's not very high. I wouldn't consider Quant and Motilal because their AUM is very low, right? Also, Navi, if you look at it, there is some problem in their returns here. I don't know for what reason. Therefore, I'm not going to consider them, right? If you look at the top 5 here, which has roughly in their 20s, 25% of their SOV, I would recommend UTI, Liquid Cash Fund, and or Invesco. There are two reasons for it. If you compare these two funds here, you will notice that their expense ratio is the lowest, which is very good. You are going to pay less money for this investment. Number 2 is that you will look at their cash equivalent here. So the cash equivalent in case of UTI is 11.63 and Invesco is 12.48. This is important because they have kept a good portion of their money in liquid form, in cash equivalent form. In case there is an emergency withdrawal going on, or all of a sudden there is a withdrawal going on, these funds are going to be able to cope up with that in a better way rather than any other funds. Last thing that I need to tell you is that please make sure you split your money into 2 or 3 liquid funds so that you're taking the least possible risk when it comes to liquid funds, right? I hope you enjoyed this video. If you did, please press the like button and subscribe to my YouTube channel. I will see you in the next video.